Part 1. Introduction to Financial Statements. In this section, you will explore the three financial statements on which financial analysis is based. The income statement. This is sometimes referred to as the profit and loss account, the balance sheet, and the cash flow statement. We'll start by looking at the income statement. The income statement is a record of the value of sales that have taken place during the financial year, along with the associated costs. In the income statement, sales are often referred to as turnover. We'll use this term from now on. Profit is the difference between turnover and costs. However, as we can see from the income statement for ABC Company, profit features more than once. First, there is operating profit, then pre-tax profit, followed by profit after tax, and finally retained profit. Now, let's put ourselves in the position of four different stakeholder groups for ABC Company. The company's managers and employees, lenders, such as the company's bank, the government, and investors. This group includes not only existing shareholders, but potential investors. We'll consider each in turn. Managers and employees are likely to be particularly interested in operating profit, as this is the type of profit they are most likely to be able to influence. Let's take a closer look. Operating profit can be increased by either increasing turnover, that is selling more or increasing selling prices, or reducing costs, or a combination of the two. A word of warning here. An increase in turnover, which is represented by volume rather than price, may also lead to an increase in operating costs, which, in the short term, may have a negative effect on profit. That is, the extra costs might exceed the additional turnover generated. For example, the business may need to recruit extra workers or buy additional machinery to meet the increased level of demand. Next, we look at the company's lenders. Lenders will also be interested in operating profit, as this will provide an indication of the company's ability to meet interest payments. In ABC's case, there appears to be a very healthy margin. The next stakeholder we will consider is the government. A government will be keen to see good pre-tax profits, as it is from these that tax revenues will be generated. Finally, we'll focus on the expectations of investors. Investors will be looking closely at the profit after tax, as this will give an indication of the company's ability to pay dividends. Whether a company actually decides to do so, or to what extent, will depend on factors such as the need to retain funds in the business to finance future growth opportunities. For this reason, shareholders may be wise to also take an interest in the level of retained profit. For a company which pays out a high proportion of its post-tax profits and dividends year after year, may be storing up problems, as it may be starving itself of the capital it requires, not only for expansion, but to replace assets as they wear out. So what can we learn about ABC Company from the income statement? Just how well did it perform in the year? To answer this, we need answers to: how did performance compare with the previous year? We can measure this by looking at last year's income statement. Financial statements usually include the previous year's figures. Was it in line with expectations? Lack of specific information about expectations may make this difficult to assess for external stakeholders, that is, those not involved in the actual running of the business. Despite what appears at first sight to be quite a good result, ABC Company could be underperforming when measured against its competitors. Only by obtaining and analyzing the competitors' financial statements will it be possible to make any realistic judgment. You may recall that out of its operating profit, ABC paid interest to lenders and a dividend to its shareholders. These payments represent its cost of capital. In the year, the company appears to have achieved a positive net cost of capital. However, to confirm just how successful it has been in this respect, we would need to check its balance sheet to assess its capital structure. We'll explore balance sheets later in the module.